What's up, everybody? Welcome in to Retail Weekly with me and Gnotz. This is going to be a weekly thing that we do where we talk about the hottest retail names and the names that we love most. Today's episode, we're going to be talking about Oscar, a little bit about IREN, IREN. We're going to be talking about HIMS, their massive dump this week, and then their massive rebound. We're going to be talking about Rivian and also Zeta.
Yep.
If I didn't name any of the retail names, that's just because we only have an X amount of time today to talk about these. And the great thing is, it's going to be a weekly thing. You guys asked for this. We're delivering on it. We're going to give you guys our takes, fundamental wise, technical wise, every single week. Big stuff that's happened throughout the week on all of these names. And then obviously, as this goes on, weekly thing, we're going to be finding new gems, new great retail plays that we can all capitalize on, make money on, and hopefully find the next 10x, the next Palantirs, the next big HIMS, Hoods, SoFis, all of those great names. So without further ado, we're just going to get into it. I'll see if Gnotz has anything to say up front.
Yeah. I mean, it was a pretty good week in the market. Monthly close is what, Monday? Is that the 31st? Can't think.
Yep.
Yeah.
Monday. Yep.
Okay, so monthly close is the 31st. That's going to be something to watch. We just did get a spike here end of day on NQ, SPY. Everything basically closed decently near highs, not highs, but
yeah,
they came. I should say they just came back. We were down in the ditches a little bit. Had a major comeback all the way back up. So definitely something to watch as we go into Monday. Usually end of month, there's usually some screwing around, and they usually actually do try to push it and funds try to see what they could do at the end of the month. But there is a lot of setups to look for going forward. And we're obviously going to be talking about those in just a few minutes here.
Yeah. Market looked like it did not like that Canada news and did not like what Trump was saying about the tariffs. It did not like let me share my screen. Yeah, it did not like that tariff news. As you can see here, we had a decent size drop from to about 1% on the QQQs after that news dropped. That Trump basically said, stop all negotiations with Canada. We're not having it because of what do you say? They said something. They said they're going to tax our technology companies. So they're trying to put this like technology tax on U.S. companies. So Trump was like, "Oh, you're going to do that?" And he's like, "No." So he basically axed that, and the market did not like that, and it dumped. Maybe just like a little news headline. Somebody in my community was calling about, now that all the Iran headlines are over, and now we're going to get back into the tariff headlines, and spot on there. Spot on. We are getting back into those tariff headlines. But, just a little weekly recap of the markets, all-time highs on the Qs, all-time highs on the SPY. IWM is not there yet, but it is climbing. Markets look really good. Really good. I know there was a lot of topping calls out there, but yeah, markets look really good. I think the IWM looks the best right now, just breaking out of this downtrend as you see. Inverse head and shoulders. It just really looks like IWM is going to run here pretty hard. They have to play catch up still to the Qs and the IW or the SPY. What do you think, Bull?
So what I kind of noticed, and I saw this post, I think it was yesterday, which is really funny. In April, you saw a lot of or maybe not just April, but I mean, after the big drop, you saw a lot of people. I saw a post yesterday that there was a lot of charts that were doing cup and handles or inverse head and shoulders. And, that's a prime example right there. IWM has been lagging for how many years now? I mean, forever. I know it had its run. Let me double check. Give me a second.
It's been so they played catch up in 2021, 2022.
Yeah.
And that was the signal of the top. Yep, that was a signal at the top. And that's what I was kind of calling for end of last year, beginning of this year, I was calling for IWM to chase down the QQQs, and usually it only catches up to the SPY, and then that was gonna be the call for the top. We
Yeah.
didn't get that, obviously. We got all the tariff FUD out there, and we basically just collapsed. So I'm still looking for that, and it's been a good indicator on when we're topping out, is whenever the IWM runs and kinda catches up to the SPY a little bit. That's usually when we're topping
Yeah.
out. So we have a lot of room to run, even to back to all-time highs. I mean, we're looking at from where we are right now to get back to all-time highs on the IWM, we're looking about 13, 14%.
Hmm.
Massive, massive, especially for all these small cap names.
Yeah, so when I'm trading intraday, I'm looking at IWM, I'm looking at Qs, I'm looking at SPY, and I kind of see, what's lagging or what's kind of taking a lead.
Mhm.
And usually, let's say, for example, Qs and SPY are leaning down, but oh, sorry, yeah, Qs and IWM are leading down, I should say.
Yep.
Um, but SPY is kind of just holding around. Um, there's a good indication. I've noticed it at least over the past month. It kind of follows through with the two. And I know small caps aren't as, big as, trading SPY and Qs, but it's definitely something to look at looking at the different indexes and seeing kind of how they're reacting, together all combined as all three of them. I do like that IWM chart. I think there is definitely something to watch there.
Yeah. They've seemed stronger than the Qs and the SPYs, right? That's
Yeah.
what I've been picking up. They seem a lot stronger. A lot of people were asking me like, "Oh man, Zeta, is almost a little over 5% up today." Oscar got up to what? I think, a
It
couple like
was
2-3% up today, and
yeah,
then they all just dumped. It seemed like out of nowhere.
yeah,
And really the reason for that was the IWM kind of, hit a peak and then it just dumped. And like I made a post about it today. It's basically like, if IWM's rip roaring, doing good, like
yeah.
these small caps are going to do good. Um because it's not me, you, and other retailers that really move these stocks.
No.
It's the giant funds that are buying into the IWM that have to buy 2,000 individual companies with billions and trillions of dollars, and they're the ones really moving it. So I always think it's funny when people are like, "You're pumping, like,
I
have
mean,
you
it's not
pumped the
really
other side?"
possible. I mean,
No, it's
you're
not.
trying to move something with I should say hundreds of millions of,
Yep.
shares. Yeah, it's just not possible.
No. But let's get into some topics here today. Oscar, we'll talk about that one first, and then I'll let you go
Yeah.
into Zeta or Rivian, whatever one you wanted to look at. Um, Let me share my screen here. Talk a little about fundamentals. Talk a little bit about. Let's see. Here we go. All right. So I posted this again. I keep posting this chart. This weekly chart is the sexiest cup and handle pattern I've seen in a very long time. Very
Yeah.
long time. And, yesterday and some of this week, we got down here to about, what, 18, low 18s. And I actually sniped 1856 on one of my buy orders. It was
Mhm.
awesome. I posted about it. But the thing people forget, you know, the most difficult thing. I'm a trader and an investor, and so are you.
Yeah.
Um, the thing people have most difficulty with is separating the two. And it is very difficult. It's not like a lot of people it comes naturally. For me, I really had to work on it for a while. It's the best thing you could do is have two separate portfolios if you're going to be both a trader and an investor. Don't mix the two. Oil and water, don't mix. You don't want to do that, right? Because, when you look at this chart, now let me be a little more specific there. Uh, I use technicals. I use technicals to figure out buy points, and I use technicals to help me realize where stocks are going in the long run. So I do this whole where trading and investing meet with technicals and just understanding buy points and price targets and when I should possibly be trimming and when I should be buying. So I do that, but I'm saying like strictly trading and investing, like investing, you're doing for the long term. You can have the technicals help you out, but trading, you're strictly getting in and out, taking profits, losing less than you win, right? So, anyways, people get confused, and when they look at 15-minute charts, hourly charts, daily charts. I really believe that if you're going to use technicals for investing, you should really be looking at two time frames: weekly time frame and monthly time frame. If you're investing and you're looking for the long term, you should be using long term time frames, weekly and monthly. This gives you the best overlook of the company that you're in, and the trajectory that it's going. When you get down to daily, hourly, 15-minute, you're going to be selling out of these amazing companies early. And that's why I brought this picture up. And you want to look at this. We're here right now, right? In this $18 to $20 range. And literally this bull flag right here that we already broke out of has a measured move up to 29. If we break out of this 23.79 area, we have a measured move to 45. So you're going to be selling your investment in a great company like Oscar 18 to 20 instead of buying in here. And then in a couple years, you're going to see it at 29, 37, 45, maybe even this year. And you're going to kick yourself in the butt. You're going to kick yourself in the butt, and you're going to say, why did I trade Oscar instead of owning Oscar? Right? So again, weekly, monthly time frames for investing purposes. If you're going to trade, keep it separate. I have been trading like Oscar, Zeta, IREN, a lot of these companies. I've been trading them in my separate trading portfolio, but in my investing portfolio, it's a no-no. It's a no touch zone in the investing portfolio. I'm keeping those for the long term, not trading those. Basically just using this stuff to help me guide me and where I want to go with this. This chart's pretty explanatory, though. We're in a great buying area. Could we go lower? I could see us coming back to maybe this $17 range to get a retest of this cup and handle on the handle side here. But we did wick down here to 18-ish. So that could have been our retest before we continue higher here. So it's really just going to be dependent on where the market goes. But the next resistance level I'm looking at is about 23 to 24. If we can finally break over this area, I'll be looking for a breakout, a retest to flip this area from resistance to support, and then a continuation higher. And then you just locked in that we're not going to be visiting, under $23 for a little while, because we have very strong support there now built up. The high five flow is increasing. This volume is literally, I have to zoom all the way up here because it's off the chart. We haven't seen volume like this since March-ish, and it's even beating that. So this volume is absolutely massive. They crushed their recent earnings. Yeah, this name is very, very bullish still on the technical side of things. And if I need to show you again, it's not just bullish on the technical side of things, it's bullish on the fundamental side of things. I literally have an intrinsic value of $59 per share on a discounted cash flow model. And that's after I put numbers in here that are lower than what they're doing right now. Free cash flow margin rates lower than what they're doing right now. They're doing around like 10 to 15% right now on an annual basis for free cash flow margin rate. I could see them growing 20% or high teens. We have some single digits in here. Just being very conservative with these assumptions and still getting a 65% current margin of safety. CAGR for 10 years is 21%. 10-year EPS CAGR is 15% per year. So overall 10-year analysis, I mean, it just looks really good. And if you just look at the EPS for next year, if you assigned a 25 PE for this company, which for their growth rate and where they're at, you definitely could see that being realistic. If they're growing 15% to around 20 some percent, $29.67 is fair value there. We already went over these strengths, weaknesses, opportunities, and threats. We've already been over this time and time again. So that's what I got that's what I got for Oscar, guys. If you have any questions, drop them in the chat. I'm going to hand it over to Bull to talk about some Zeta or Rivian.
Yeah. I'm going to pull up Zeta. Give me a second. Let me know when I'm up. Okay. So
Got you.
Zeta, yesterday we hammered right off that 9 EMA, that pink line right there, which was perfect. I grabbed some long-term shares there. It was actually my second entry. I initially started it the day prior on the red candle here in the low 15s, and then I added at 14.92. I also opened some August calls on this name. August or September? Hold on a second. September calls, sorry. September 17.5 calls. Those are up 45% today, and I actually sold them like right near the high, which was the most perfect scenario that could happen. So obviously we talked about we didn't really talk about Zeta. Did we? I don't think we did, Ronnie.
No, we didn't talk about Zeta.
Okay.
I was still doing my analysis. I
You're
do
still doing
have
yours?
I'm done now. I was doing
Okay.
it. I have my high five snapshot and everything up. I saw you did a live stream on it too. And you
Yeah.
went in depth into it. If anybody wants to check that out on Gnotz's X page too.
Yeah. So how about you have your analysis ready?
Yeah.
Okay. Yeah, so I'll give a little explanation of what Zeta is.
Yeah.
So basically, Zeta is a global AI-powered marketing cloud platform. They do marketing. They help companies target, acquire, retain customers by basically using their large-scale consumer data. They have over 230 profiles that they've gathered. And they use machine learning, AI, and then they market those tools through email, SMS, web, TV, so on and so forth. I believe their moat is basically built on their data, all the profiles they have, as well as their AI integrated full stack marketing platform and their enterprise contracts. So they're an enterprise marketing firm. If I'm 100% from what I read and what I kind of dove through, I believe they're 100% enterprise. So I think this is definitely something to look at. They're very well positioned in this field with digital advertising and how the whole entire world has basically shifted to digital advertising. And they focus on privacy first and, basically data driven, marketing. So another great thing that I love about any long-term investment that I do is it's a founder-led company. They have great leadership. John Scully, who co-founded the company with David Steinberg, another co-founder who is also currently the CEO. John Scully was the CEO of Apple and Pepsi at one point. And David Steinberg, the other co-founder who is currently the CEO, has ran and built multiple billion-dollar worth companies. So again, founder-led company, and obviously they have really good track records. So that's great to hear. We kind of went on what they do and the leadership. If you are ready, Ronnie, I'll switch it back over to you really quickly because I don't have it right up right now.
Yeah.
And yours looks so much better than what mine looks like anyway. So
they kind of remind me of TTD, Trade Desk.
Okay. Yes. Yeah.
Yeah. So they do digital advertisement. They work, all the ads you see on, Facebook and really across the board on just the internet. Like TTD has a role in it. I think the big potential threat against TTD is like, Meta's coming out with AI driven, like they're doing fully AI ads now. So that's
Okay.
obviously a big threat. I'm sure that's part of a threat for Zeta too, but I know they're a little bit different in their
Yeah.
marketplace. So yeah, for Zeta here, just get brass tacks. Phenomenally looking chart here. Just basically super undervalued looking. $26 is the fair value I have on a discounted cash flow model. 42% below its current intrinsic value. So 42% margin of safety you're getting on this name, with a 15% annual CAGR for the next 10 years, if these assumptions are correct, obviously. On an EPS basis, you're looking at 2027 of a fair value of $21. They're much better with their free cash flow right now than they are with their EPS, but they are, continuously growing that. And as they become into a bigger company, they could probably get into buying back shares and, bringing up that EPS. So basically, free cash flow yield, forward free cash flow yield, PE, forward PE, PEG ratio, DCF model, EPS model. It's a buy everywhere except for, your price to sales ratio. But, they are growing mid to high teens. So having a 6 for your price to sales ratio and being a, tech driven services company, I'm okay with that high of a price to sales ratio. Strengths I have: AI driven platforms, consistent outperformance, enterprise client growth. Weaknesses: competitive pressure obviously, dependent on large clients. They have a lot of the revenues coming from very large clients, but again, they are a smaller company. So, I'd rather have them have those sustainable clients than have like a bunch of small clients that could all up and leave at a moment's notice if the economy takes a big hit. Brand visibility is obviously a weakness. That's what you're going to get with any smaller company. AI expansion, obviously, that's a big opportunity for them. They can really boost those margins up a lot with using AI. Strategic acquisitions, they did a $250 million acquisition of Livelant. Good luck saying that. Undervalued stock based on my high five snapshot. Threat: macroeconomic headwinds. If we do go into a recession, a lot of companies are going to get hit. This one's going to get hit. It's some companies aren't going to get hit that much. Some companies are going to get hit really bad. I say there's like a middle ground, right? A lot of companies pull back on their advertising, on their tech, on just basically paying other companies to do things. Data privacy regulations. It's pretty much everything nowadays.
Yep.
Political revenue volatility. So they did really well during COVID, and then they kind of like flatlined a little bit, and then they've bounced back since then. And then they've done really well since the recent elections. And if you're looking for one thing that could be a stake in the heart of Zeta, look out for that potential dip again. And so look out for what we saw during like right after COVID. Like we saw a big rise in revenues and then a dip after COVID, right? And then a continuation. So if we had a big rise going into this recent election and now, we're going to dip from that, which I don't think we are. It's just something to look out for. If we do start that and price hangs in there, then that might be a reason to exit this to end the bull thesis.
Yeah.
Yeah.
And I would say, I just lost my train of thought. So if the economy was to come down, kind of like, related to COVID, that would be a big thing that would definitely hurt the business. I think the biggest thing though is obviously, they started really ramping up their revenue, becoming profitable, this past year or this going into this year. Every quarter has been profitable. That's what I love to do personally when I'm long-term investing. I know we talked about this last week. I love companies that are just turning a profit because I think that's where they start to get that major, runway.
Usually
I love
super
kind of getting on the
undervalued
ground
too.
floor of that. Yeah.
It's funny. I feel companies are like typically more undervalued right there at that beginning stage of flipping from non-profitable to profitable. Then it's so funny because when companies are super unprofitable, don't have good free cash flows, are increasingly more negative free cash flows or increasingly worse net income, is when people hype it up the most, which is crazy to me. Instead of right there, whenever, and what I think is happening, my thesis is people start when they're really unprofitable, and then they hold and they're like, I see the vision, and the vision could definitely be there. But what
Yeah.
happens is they just get shaken loose.
Mhm.
That tree is just getting
Yep.
shaken up, whatever, over and over and over again. And then eventually, because it takes so long for them to get there to profitability, those investors, bail, right? They just say, you know what, never mind, on to the next. And then they look, 5, 10 years and they're like, oh my gosh, I can't believe I had that stock at that price. That's so
Yep.
crazy. How many people did that with Tesla or Palantir or,
Yep.
Hood or any of
I
them,
was gonna
right?
say Tesla is like a big one. I
Yeah,
mean, so
I
many people
luckily
hated
held
on
through.
Tesla just because it was Tesla,
Yeah.
and look where it is. That's I kind of feel like that's the same thing when I talk about Rivian.
Yeah.
They just went gross profitable, okay, which was big. It's the only
Mhm.
other electric company to do it, um, or at least U.S. based. Um, but they talked about going net income profitable, at 2027. I believe it's possible that they do it a little bit before then. They've been really creeping up on their EPS, and I think it's kind of gone a little under the radar while they're doing it because people have been focused on them actually getting to the gross profitability, their deliveries or anything that they have there. But
Yeah.
overall, they are doing major changes and have been doing major changes in the company to kind of cut costs. Obviously get ready for their big product R2, which is going to be basically Tesla's Model Y is just a clean comparison. And then every vehicle that they make now going forward with the factory updates that they just did and their improved efficiency on the line, even their higher base cars are going to make more. Well, they were losing money, I should say, but they're going to lose less and possibly turn a profit, due to what they are actually doing as of right now in this summer. They're totally rechanging the whole entire line currently.
Yeah, I mean, going from a negative 23 EPS in 2021 to now down to a negative $3.65 EPS, that is major, major growth. I get that it's still negative, but yeah, for Rivian, that is major. Like that is crazy. They jumped it, they
Yeah.
dropped it down to $7, then six, then 469, now 365. So yeah, they are creeping closer and closer. There was something else I just saw. Their operating income has gone from about negative 7 billion down
Yep.
to they cut that in half
Mhm.
in 2 years, 3 years ish. So yeah, they're definitely doing really good. Their cars are super sleek. They just need to um continue down this path. Their gross profits down to negative 467 as well. So this is
Yeah.
seeking alpha, by the way, everybody.
And
Um
they're by the way, the Volkswagen deal is big. One, it
yeah,
adds capital that they need. Two, it's adding revenue. They were able to lower costs with part providers that Volkswagen already has a strong relationship with over
mhm,
the years, that Rivian couldn't really do, especially when they started to really up ramp in COVID, which is obviously the worst time that it could have happened.
yeah.
That was key. One big thing is, let me get it for you right now. So as of today, Volkswagen has to invest $1 billion in Rivian at a price of 19.76, which is a 33% premium to the 30-day weighted average price of 1482. That funding will occur on June 30th. So this coming Monday.
Oh wow.
They will invest $1 billion at $19.76.
That's solid. They still have the Amazon deal too,
Yep.
right? Have they
Yeah.
have they realized all of that? They probably
Not yet.
haven't realized all
They
that
still
revenue
have
from the
another
vans.
60,000 vans, I believe. And the
Okay.
biggest thing is one, Amazon owns a large stake in Rivian.
Yeah.
Amazon and Rivian actually built those vans together. And now Rivian is starting to, now that they're not exclusive with Amazon anymore, they are able to, obviously work with other companies and, start selling those vans, which they have been that started the end of last year, or actually, sorry, beginning of this year, I should say. So that is a big key. I know there was a couple companies that tried them out. I know there's a couple of companies that actually committed, like Factor is one of them that just comes off right off the mind, which is like a food delivery service. Like they, not food delivery, but they make food and they send it out. One of those like homemade meal plan stuff.
Yeah.
So yeah, that's going to be another part of the business that helps out. And then Volkswagen, really made this deal with Rivian to basically use their software, their technology, and that's what Rivian is really good at. And that's why I think Rivian is also not also not a car company. I think they're more so a tech company like Tesla, because they are making everything in house. They do all their full tech stack in house. They make they buy some chips, but they make their own, versions of their chips.
Are they doing self-driving
Yeah,
in-house as
there's
well?
autonomy. Yep, correct.
Okay.
So yeah,
So I
there's
know
a
like
ton of stuff.
Mobileye, I'm invested in Mobileye, and
Yep.
I know they have a strong partnership with Volkswagen, and that's where I was kind of going in my head.
Okay.
That is
Okay, that's
like,
interesting.
yeah, because if they're partnered really well, then they could introduce them with Rivian, and I feel
Yeah.
I do feel like Mobileye is number 3 out of like Tesla and
Yeah.
Google for like their technology. It's really good. It's just like it just seems like they can never get going, but they're pretty big, from where they were. But yeah, it's really interesting.
Yeah, it's definitely
I'm
something to
definitely
watch. I mean,
yeah,
again, it doesn't fit, all the buttons that we normally invest in, but I think the upside is there personally, and that's why I've been taking the investment. I did the same thing with Palantir right before it went profitable. I know Rivian is going to take a little longer, but the product, the execution, everything going forward, I personally like it, and the chart is really nice. It is trying to break out. So
yeah. I think I got in on this as a trade on
mhm,
this first breakout, and then it faltered right here at this resistance. But it could just be retesting right here,
yeah,
like I have drawn up here, like I shared this, and we could be making another run at this. And if we do actually hold this area and curl back up and break out, then yeah, we do have a long way to go up to into the 20s, almost
yeah,
doubling your money from 13. So
yeah. So the R2, which is that comparison to the Model Y, is expected
mhm.
to start producing early next year, possibly for end of this year, but who knows.
Yeah.
Um, that is going to be their biggest catalyst, and that's going to be their biggest seller. I mean, I know, I think 5 or 6 Rivian owners, and I have not heard anything bad. A big reason why I invested in Tesla, and I don't know if you see it personally as well, but big
Mhm.
reason why I invested in Tesla 10 years ago when I was literally just starting trading / investing, and I wasn't an investor back then. But I started it just only in Tesla, was because I started to see their cars everywhere, everywhere, everywhere.
Yeah.
And obviously, it was just getting in my brain. Obviously, people like the cars, they're selling. Now, over the past year, I see Rivians every single day. Like it is really ramped up. So
Yeah. I feel like I see less Teslas now. It's weird.
I see a lot of Rivians around here. A
Yeah.
lot.
I feel like a
And
lot
I
of
live in New
people
York, not in the city, like
sold their
45 minutes north.
Teslas or traded them in after that whole debacle. Um, yeah. I mean, so think of it like I think we're looking at the iPhone moment for vehicles,
Mhm.
really. Um, you have your phone, you take it everywhere you go. It's basically a computer on, mobile computer, and you can do everything on it. Um, I feel like that's where cars are going. They're going to be this, um, you know, smart vehicle that just takes you places. You don't have to drive. You can get work done while you're, in the vehicle, going wherever you go. You don't have to do anything, and it's
Yeah.
just basically like a giant phone, like driving in a giant phone.
Yeah.
You have all the bells
Yeah.
and whistles. So that's where I think that's going. I think something similar is going to happen with like glasses and stuff as well. But yeah, yeah, crazy. Chart looks good. See if we
Mhm.
can hold this retest here. If we can and bounce, then I might look to get back in this as a trade. Still looking at everything else. We have to talk about hymns.
Yes.
Wow.
Yes.
Wow. From
Amazing move.
this company's going to $100 up here to this company's dead. NVO just ate their lunch. Blah 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 blah. And it's funny because I made this post this morning. It's like the dip buy box. We got right down to the bottom of the dip buy box that I created for the levels, and we bounced hard. I mean, we were up 11% today.
Yeah.
At one point, we were up, 10% yesterday at one point. Absolutely big bounce. And I know you're gonna like this because you love the anchor volume profile probably as much as
Yep.
I do. The point of control was right where we came down to. And if you don't know what the point of control is, essentially taking the anchor volume profile, it's taking the profile of all the volume over X amount of time. So I basically put mine back here, right? It's taking that and it's saying, okay, well, this is like the Bulls versus Bears point of control. So below it, the Bears have control. Above it, the Bulls have control. And basically at that level is where you are going to have that decision time, right? So at this level we hit right here at 43.04, the Bulls came in and said, no, 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 Bears. You're not coming down to fill that gap down to 30.92. You can't have hymns. It's not that type of company. We're gonna fight you. And then they bounced. And now they came up and basically now they're looking to fill the gap that they started back up to like 55.77, back up to this volume shelf up here. So here's how I'm seeing him. So then I'll let you go, Gnotz.
Yeah.
I'm seeing it as we most likely come back up here and fill this gap. Oh, I do see more downside in hymns. And the only reason I'm saying that is because I'm just kind of waiting for like that second wave of FUD, right? So fear, uncertainty, and doubt the news, it usually doesn't just come in one wave, right? It's like a shock you, hit you, punch you in the mouth. And then there's like usually like a second wave or sometimes even a third wave that comes in to really like push that down, right? Because there's a narrative now. The narrative is, oh my gosh, Hims is doing things illegally, right? And so now I'm waiting for like a lawsuit to get smacked down. Even if it doesn't pan out, just the fact that a lawsuit got handed to them is going to be a big deal, and this thing's
100%.
going to shoot down again. So
Probably
that's
another
what I'm kind of
20%
waiting for. That's why I'm saying we're not out of the neck of the woods yet. What do you think?
Yeah, I think the same thing. I mean, anytime there's bad news with hymns, it's 15, 20, 25%. I mean, this NVO deal, which was, again, a very big deal, was what, 33%, something like that?
Yeah, 33% down, peak to trough.
Yeah.
Crazy.
So we closed over the 21 on the daily. We did not close over the 9. Again, last 2 days, amazing move. Nothing to cry about. I mean, I made back some of the move from, that big downtrend. But if you were a buyer the past 2 days, you are happy as a pig in shit.
Yep. You're killing it.
And yeah. And
you're up like 20-some%.
Yeah.
20-some% in 2 days.
Yeah. No, literally.
21% on the close if you bought the bottom, 28% if you sold the high.
Yeah.
So absolutely insane.
And I gotta say, like, I feel the same way. There is possibility now of litigation. Once they did the NVO deal, that kind of went away a little bit, I would say. It definitely wasn't as prominent as it possibly could be now. But still, Hims immediately fought back and hired a very good executive. I mean, they are really building a strong leadership team there.
Yes.
And there is definitely a lot more to come in that name, in my opinion.
Yeah, 100%. I would say be careful in the next week, right? There's a weekly candle. Be careful in the next week. We just hit the exact volume that we hit a couple weeks back in May on the week of May 5th. And things were a lot more bullish back then than they are now, just because back then you had the whole bullish NVO deal, and that's what caused this rally up. So just be careful. There's still aftermarket tradings if you're a trader and you're trying to squeeze out a little bit more. Maybe you're up here, maybe take some gains before the weekend gets kicked off right before markets close, is what I would say. If you're a long-term investor, congratulations on buying the good dip. If it dips more, I'll be looking to buy some more. That's how I kind of look at it.
Yeah.
Next, we got to talk about something that has just been absolutely mooning, and that's IREN.
Yeah. I have
My
not followed this one.
gosh. What's that?
I have not followed this one. Have you been in and out or in?
So I got in. So basically, we got this bullish cross on my high five indicator, and this is a longer term indicator I have here. And then we broke out of this downtrend line, as you saw, and I basically entered in right here, and I called it out in the community, and we've just been rip roaring this whole week. And I entered because the setup was so great. But when you get a sweet setup, and this name is just starting its hype up, right? It's a banger. It's a banger every time. So it's similar to Oscar and Zeta, last week, just getting in right before the big takeoff and then it just going crazy. This volume is absolutely wild. I will say I'm trading it, and I've been saying this. I'm trading it. I'm not loving it. I'm trading it. I'm not investing in it.
How are they financially?
Financially, they are. My biggest concern is I'll pull it up on. Just wait till you see this. This is my only big bugaboo about IREN. So EPS looks good. Looks like they're going to be profitable. 10 cents this year. Last year was negative 29 cents, and then they're going to jump to $1.05. So they're expected to explode on EPS. So that's a great thing. If you're valuing this company on EPS, I have like a 2025, 2020, or 2026 fair value of like $30, and they're $14 right now.
Okay.
But if you're valuing this company based off free cash flow, you're not going to be happy because essentially they've gone from they don't even show free cash flow on here. Oh, yeah, they do. They do it in a weird way.
And you're a big free cash flow guy. I know we kind of talked about that.
Huge free cash flow guy. Yeah.
Yeah.
So they went, here it is. Yep. So they went from, in 2021, they were losing 3.85. Nope, that's per share. Let's see. Levered 9.2 they were making in free cash flow. So they went from 9.2 in 2021 of positive free cash flow now to trailing 12 months 990 million negative free cash flow.
Yeah, no bueno.
Which is
any reason why?
You see it. They just steadily keep on increasing that negative free cash flow. I've been looking at it, but I kind of so my whole thing is I don't really deep dive unless like I get like what I want, right? That's what my high five snapshot is. It's really to tell me, hey, do I like this? Is it worth me taking the hours and hours and hours to go deep dive this thing, look at 10Ks and 10Qs and stuff? And for me, it wasn't. Like I said, if you're looking at the EPS and you're going based off 2026, $30.76. But that you have to get this 784% EPS growth rate that analysts are expecting. So they're going to go from 12 cents free cash flow positive in 2025, and then bam, they're going to jump up 784%.
Yeah.
My problem with that is, what if not? If they don't, let's say they grow, I don't know, 100% to 23 cents. Well, then your fair value is $5.29.
Yeah.
So you see, it really, and here's my thing with the numbers and the Excel sheets and like every company, like you're not going to just buy great companies based on an Excel sheet, and you're going to miss out on some great companies if you only look at Excel sheet too. Like you got to be well-rounded. But I think too many people go after companies that are extremely not profitable. They have signs of things continuing to get worse. And like we talked about earlier, they go after that hype and only the story. I am very particular, like my high five gems, which like is a new name that I started, like a new thing that I started in the community. I was like, we're calling out these like 10 baggers, maybe 100 baggers. We're finding these small caps that could really, really be the next big retail name. So we started that in the community now. Yeah. Calling it high five gems. We have 7 of them right now. I just found 2 more last night. I'm not going to spill the beans here on live stream, but I'll probably be posting about them next week. Community members are going to get access to that first. Obviously, I already posted about those, but just another 2 names that are very undervalued. What I'm looking for is that they have positive free cash flow, growing free cash flow. They're net income positive, or they're about to flip to net income positive.
Okay.
And they just have a great margin of safety, and they have a good business that I can see growing. It's like hitting all those pillars. And then if they have a great technical setup too, even better. So, yeah, not building portfolios around them, like huge 500K portfolios around them or anything, but I basically built like a 40K high five gem portfolio, and I'm just going to track it in the community and see how it does over the next 2, 5, 10 years. And we'll see if these high five gems can really produce, outsized returns. Cause you know how it is. I mean, you pick 7 stocks that meet your criteria. It's just one of them 10x, you know what I mean? You're looking at, 6,000 to 60K. So just for one of them. So yeah.
Yeah. That sounds good.
Yeah. But yeah, IREN is just absolutely going crazy. Don't love the fundamentals, like I said. And then be wary. Again, you still have time. To be totally transparent, I actually sold out of my trade this week, actually today, for a 25% gain in just a week on this trade. So massive trade for us in the community. Sold out really for this main reason. We're running into L resistance. This 1460 to $16 area. You see it time and time again. Resistance, 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 resistance. And you see this thing. We've ran from $5 to $14 in like 2 months.
Mm-hmm.
As a trader, I'm exiting. I know everybody's saying this thing's going to $100.
Yeah, that's what they always say though.
That's great, but then it doesn't right away. Things don't move up in a straight line. And I actually measured out these moves. So if we look at these moves here, we had a 279% move, 164% move before we topped out right at that 16 area. And look at this. We're having basically 195, actually a 179% move here. So almost the same bar level. And I'm just like, we're kind of getting to that area that the last 2 times we went on a big run, we capped out at,
Yeah.
So I'm looking for this thing to pull back maybe down here, and I would re-enter here on the retest and then run at it again to swing it into here. And if you're looking for a breakout of 16, look for a breakout, then a retest, and then get in this thing.
Nice.
We didn't talk about Zeta. We'll talk about this before we go. Yeah. 47 minutes, running a little long. So, just basically this nice falling wedge, this downtrend that we've had since this massive, this is still crazy to me. A 50% negative week is absolutely wild to me. That is wild. The thing that scares me about today is look at this volume from that 50% week, and then look at this volume this week. It almost got up there.
Yeah.
So
was there any reason for that? I didn't look that far back in news or anything.
Yeah, I haven't got to that portion of the 10Qs yet. So I'm still waiting on that, but I'm guessing it's something to do with earnings. Clearly. Price said something about, I don't know. Who knows? Oh, you know what? That was probably when they talked about the lawsuit or something. They're probably like, hey,
oh yeah, they're expected to close that soon, right?
Yeah.
Yeah.
They probably announced that during their earnings, and that's probably what it was. Yeah, most likely. But yeah, guys, again, zoom out. It's a weekly chart. If we look at this, we already did the tough part. We already broke out of our downtrend. Now we just have to hold above this downtrend. So basically from 11 up to 16 where we are now, we just need to hold this point of control right here, right at basically like $14. If we hold that point of control here and we bounce, then we should be able to move and close this gap here up to this $18 and then really start a nice uptrend here up into 21, 26, which again, I have $26 for the fair value. So, but yeah, did you have anything else?
No, I mean, like I said, I started a position in in Zeta yesterday and 2 days ago and yesterday.
Yep.
And I'm kind of happy where I'm at. If it kind of sits around here, I'll nibble more. I'm just kind of testing the waters right now and just getting ready for that. Same thing with Oscar. I know we talked about that a little bit. I added a little bit on that dip into the 18s and lower 19s. That I only got shares. I didn't get calls, like longer term calls. And I already have a really good position on Oscar from 12 and really, really high 12s in one account and mid 13s in another.
Yeah, I got a couple accounts, similar thing there.
Yeah.
Just really, really good cost basis is. I'm okay, jumping up, but I'd like a bigger pullback. Something I was gonna say there. Can't remember. Oh well. Yeah, building these positions out, guys. All this stuff looks really good. Appreciate you guys joining us. I gotta get upstairs. My little one's freaking out. I hear him. I'm sure you hear him too. But appreciate it, Gnotz, for hopping on. Again, we're gonna do this weekly, and we're gonna talk about all this stuff. And yeah, appreciate you guys tuning in. We'll catch you in the next one. If you guys want to watch more, check us out on X or YouTube or wherever you can find us. And hope you guys have a great, awesome weekend. Relax, chillax, take a break, step away from the markets, and let's have a great weekend, okay?
Sounds good.
All right. All right, Gnotz. See ya.
Have a good one.
You too.